Assalamualaikum everyone, my name is Noila Nuzulaika binti Ahmad Ramzan. My metric number is 10.24F172. I will present part A, reporting progress of our project. In this part, we divided the task among our group members and set the duration for each task. First, collecting information for Boots Company was assigned by me. I complete this task in one day. Next, preparing and updating the progress report was handled by Nur Masturah and Dia Kalisah. This task took 3 days because it required detailed writing and proper organization. Then, examining and extracting key details from the annual report was done by me. I completed it in one day. After that, calculating the net working capital, operating cycle and cash conversion cycle for Boots Company was assigned to Nur Masturah. This task took one day. Next, checking and evaluating the net operating cycle and cash conversion cycle was done by Dia Kalisah in one day. Then, examining strategies to optimize cash flow and the importance of inventory control was completed by me in one day. After that, analyzing collection methods and procedure to manage account receivable was handled by Nur Masturah are complete in one day. For the creative part, recording, editing and finalizing the video content was done together by me, Nur Masturah and Dia Kalisah. This task took one day. Finally, proofreading and reviewing reference was completed by Dia Kalisah in one day. Overall, all tasks were successfully complete within the planned duration and every member contributed to the project. So that's all for part A. We'll continue to part B. Now, I will present part B, which is the financial calculation for Cita Holdings Berhad. First, we calculate net working capital. The formula is net working capital equals to current asset minus current liabilities. The figures are taken from the statement of financial position, which is also known as the balance sheet. Current asset is 91,192,226 ringgit. And the current liabilities is 7,055,096 ringgit. So, net working capital equals to 91,192,226 ringgit minus to 7,055,096 ringgit. The answer is 84,137,130 ringgit. This means the company has positive working capital. Next, we calculate the net operating cycle. Operating cycle equals the inventory period plus receivable period. Formula of inventory period equals to 365 divided by cost of sale multiplied by average inventory. Cost of sale is 78,012,372 ringgit. Average inventory is 55,576,817 ringgit and 50 cents. After calculation, the inventory period is 260 days. For receivable period, the formula is receivable period equals to 365 divided by credit sale multiplied by average account receivable. Credit sale is 13,158,885 ringgit. And the average account receivable is 17,970,620 ringgit. After calculation, the receivable period is 498 days. So, operating cycle equals 260 days plus 498 days. The total is 758 days. This means the company takes 758 days to convert inventory and receivable into cash. Next, we calculate the cash conversion cycle. The formula is operating cycle minus payable period. Operating cycle is 758 days. Now, we calculate payable period. Formula is 365 divided by cost of sale multiplied by average account payable. Average account payable is 6,179,123 ringgit and 50 cents. After calculation, the final cash conversion cycle is 729 days. From the result, the company has positive working capital. However, the operating cycle and cash conversion cycle are quite long, which means the company takes a long time to convert its investment into cash. So that's all from me. I will continue to my friend Dia Kalisah. Thank you.
Assalamualaikum. My name is Dia Kalisah binti Rosnan. My matrix number is 1080-24F1060. I'm going to explain about part B, which is calculation for Bonia Corporation Berhad. All figures used in this calculation are taken from Statement of Financial Position, SOFP, for current assets, current liabilities, inventory, trade receivables, and trade payables, and from Statement of Comprehensive Income, which is SOCI, for sales and cost of goods sold, or COGS. First, we are going to calculate the net working capital. The formula is net working capital equals to current assets minus current liabilities. From the soft B, current assets equal to 264,046,000 ringgit. For current liabilities equals to 78,907,000 ringgit. So the calculation is 264,046,000 ringgit minus 78,907,000 ringgit and equals to 185,139,000 ringgit. This means the company has 185 million ringgit in excess current assets to cover its short-term liabilities. Next, we calculate the net operating cycle. The formula is operating cycle equal to inventory period plus receivables period. For inventory period equals to 365 divided by purchase times average inventory. The figures used are purchase 153,893,000 taken from the Sochi, average inventory 93,728,000 taken from the Softby. So, the calculation is 365 divided by 153,893,000 times 93,728,000 equals to 222 days. This means the company takes 222 days to sell its inventory. Next, for receivable period equals to 365 divided by account receivable times average account receivable. The figures used are account receivable 51,802,000 taken from the Sochi, average account receivable 54,045,500 ringgit taken from the Softby. So, the calculation is 365 divided by 51,802,000 times 54,045,500 ringgit equals to 381 days. This means the company takes 381 days to collect cash from customers. Hence, the total net operating cycle will be 222 days plus 381 days equals to 603 days. Therefore, the net operating cycle is 603 days. This means the company takes 603 days to convert inventory into cash through sales and collection from customers. Lastly, we calculate the cash conversion cycle, which is OC minus DP. 603 days from the previous calculation minus by 365 divided by 153,893,000 times 28,814,000, where 603 days is the operating cycle from the previous calculation, and 153,893,000 is purchase or COGS, which is taken from the Sochi, while 28,814,000 is average account payable taken from the Softby. Now, we calculate the payables period. 365 divided by 153,893,000 times 28,814,000 equals to 68 days. So, 603 days minus 68 days, which is 535 days. Therefore, the cash conversion cycle is 535 days. That's all from me. Thank you.
Assalamualaikum. My name is Nur Masturah binti Abirahim. My matrix number is 10-24F1058. For the first question, we compare the cash conversion cycles for both companies. Bonia has a shorter CCC of 535 days, while Cheetah has a longer CCC of 729 days. This means that Bonia converts its inventory and receivable into cash faster than Cheetah. However, both companies have a very long cash conversion cycle, which is more than 1 year, which indicates efficiency. So, conclusion overall, Bonia is performing better than Cheetah in managing working capital, but both companies still need improvement. Next, management can improve cash flow by reducing the cash conversion cycle through 3 main strategies. First, reducing inventory days, which is DIO. This can be done by improving inventory forecasting and adopting a just-in-time system. Second, reducing receivable days, which is DSO. The company can offer early payment discounts and improve collection procedures and follow-ups. Third, increasing payable days, which is DPO. Management can negotiate longer credit terms with suppliers and delay payment within the agreed credit period. By reducing inventory and receivable days while increasing payable days without damaging supply relationship, the company can shorten its CCC and improve liquidity. Inventory control is important for several reasons. First, it prevents excess capital tie-up. Too much inventory locks up cash that could be used elsewhere. Second, it reduces storage and holding costs such as warehouse costs, insurance, spoilage, and obsolescence. Third, it prevents stockouts, ensuring smooth operations and avoiding lost sales. Fourth, it improves profitability and cash flow because efficient inventory management increases turnover and shortens the cash conversion cycle. In the case of Bonia and Cheetah, high inventory days suggest weak inventory control. Lastly, companies can improve receivable management through several methods. First, credit evaluation. The company should check customer creditworthiness before granting credit. Second, having a clear credit policy. This includes setting clear credit terms such as 30 days and limiting the credit amount. Third, offering early payment discounts. For example, 2/10 net 30 to encourage early payment. Fourth, regular monitoring and preparing an aging schedule. This helps identify overdue accounts and ensures prompt follow-up. And finally, proper collection procedures should be implemented, such as sending reminder emails and making phone calls. The company may also suspend credit for customers who consistently pay late. That's all from me. Thank you.